Hello and welcome to another episode of Chats with Chip. I'm your host, Chip Griffin, the founder of Saga, the Small Agency Growth Alliance. And I am delighted to have with me today a really interesting guest who's going to have, I think, some useful perspectives on the financial management of your agency, something that we're all interested in, and yet maybe we don't want to think about every day. But Ryan does. Ryan Watson, a partner at Upsourced. Welcome to the show, Ryan.
Thanks, Chip. Happy to be here.
It is great to have you here. And before we dive in and start talking numbers and books and reports and recessions and all, who knows where else we'll go,
Where we go.
why don't you share just a little bit about yourself with the listeners?
Yeah, right. So, Ryan, I'm a partner at Upsourced. Upsourced, if I only use like 5 words to describe us, I'd say we're an accounting firm for creative agencies. I'd say the accounting firm component is a little bit of a misnomer in that, unlike traditional accounting firms, we don't really focus on the compliance aspects of businesses, a la audits and taxes and things like that. Where we really get involved is partnering as the CFO for our agencies. So what that means is we're going to do one or both of two things. The first is help you build systems to collect the financial and non-financial data you need to make decisions. And then we're going to use that data and sit with you side by side to help you make those decisions, right? So we're going to do your outsourced accounting. And we're also going to provide an ongoing cadence of advisory. So that's what we do. Before my role at Upsource, I helped run an influencer marketing agency that we sold to a public company, Quotient, in 2018. So I've been on both sides, both the client service side as well as the operator seat. So I know the space well.
Well, and I think it's always helpful to have people who have been on both sides of the fence
Yep.
because it allows you to more directly relate. It's sort of like, if you're an agency owner and you used to work on the client side and hired agencies, you have a much better appreciation and perspective that can help you in doing your job better. And so I love that you have that, and I think it'll be useful in this
Yeah,
conversation.
totally. Yes. Yeah. Total principal agents problem, right? It's very easy to be the consultant and say, you should do this. But nice to have the empathy for knowing like what it really means to actually go execute that. So
Right. Now you said you don't do the compliance side, so does that mean that typically if a client they would have another local tax preparer type person that you would
totally.
partner with? Yeah.
Yeah. And for the most part, most people come to us that with already having a
Yep.
tax relationship, right? Like they come to us because they've hit an inflection point in their business. There's a few inflection points along the road that we commonly see. And generally it's okay, what got us here won't get us there. We need experts to help us navigate that path, whatever's required. And so generally they're thinking of us in that way and not in the like, again, managing my taxes or providing my
Right.
insurance, whatever that is. Yeah.
Right. So I hadn't intended to start here, but as I always do on the show, I follow whatever thread
Let's do
I
it.
see. So I'm curious, as you, since you're working with a lot of different tax preparers for
Yeah.
agencies, what's your general perspective of them? Are most of these folks well suited to serving the kinds of businesses that they're advising? Because I know that a lot of times there are folks who don't really understand the businesses that they're preparing taxes for, and that can be problematic.
Yeah. Well, look, and by the way, all of our, agencies have this feeling and to some degree and accountants, I'd say like, but especially in the world of tax. And by the way, I'm a CPA, so I love my fellow CPAs. I love our tax preparers. But I mean, I'd say generally like the general sentiment is nobody's satisfied with their tax relationship. Like
Sure.
everybody has the thing to complain about. Some of it's valid, some of it's invalid. I mean, what I would say is our clients are increasing and look, we work with over 100 marketing agencies. So I've got like a pretty good representative sample of the world and agencies are increasingly complicated from a tax perspective. They're increasingly distributed. So in this wonderful country, the US, we have different tax regulations as it relates to the local jurisdictions, the states, separate from federal. And so, as you start to hire employees in multiple states, and in some cases in Canada, for instance, like your complexity quadruples or more, not only with regard to the compliance of like, again, a perfect example, I'm working with a client right now where they're implementing a policy related to reimbursing for work from home benefits, right? Some states
Right.
like California have implemented legislation that really forces your hand to do things like reimburse for utility costs that, don't exist in like my state, Ohio. And there's both a compliance component to that as well as a tax implication component to that. And if you're working with a sort of local CPA who is very specialized in your state or your tri-state area or whatever it is, they're going to really struggle to help advise you through those situations. So, I mean, again, I would argue that like there are many wonderful options, but they're not all wonderful options, right? I would say an increasing number of agencies are going to need to work with a large regional or even national firm who has the kind of breadth of experience, who can help you in multi-state situations, who can help you in sales and like sales and local tax situations, um, as well as other things like R&D tax credits and other kinds of credits. So the short answer is as long as you're working with it's less about, in my experience anyways, it's less about having very specific focus in a service-based business and more about having a breadth of experience across different components of tax. Does that
Right.
make sense?
It does, and I think you make a great point about the complexity increasing, and I think, unfortunately, a lot of small agency owners don't recognize the complexity that they may be getting into,
Yeah,
because in recent years, a lot more agencies have gone to work from home models, have gone to having employees who live in far-flung places, whether that's inside the US or even outside the US, and they don't stop to ask, what are the implications of this? What
yeah,
have I created a tax nexus that's going to impact the business? Am I filing all the right paperwork for the employees? Am I compliant with all of the right regulations? Now, fortunately,
totally.
most small agencies aren't large enough to trip
Well, you're
those
totally right.
regulations,
I mean, the
but in
answer is
some places you are.
that's right. I mean,
So,
the answer is you're not. I mean, just
right,
period. Like you're not. And the question is really a matter of risk mitigation than it
right.
is complete compliance. But again, you need somebody who's got a
Yeah.
lot of experience with the concept of risk mitigation who can talk you through the pros and cons of trying to completely comply or not. And so again, you bring up a wonderful question. You should be very thoughtful about who you choose to partner with. And that is likely to change as your business grows and matures.
Right. So, as you're thinking about the firm from sort of a financial performance standpoint,
Yeah.
what are the kinds of things that you're looking at with them today? What are the key topics that you find yourself talking with agencies about over and over again right now?
Well, it's a good question, and it kind of brings up sort of a thing that we talk about a lot, which is our kind of way of viewing the world, and I guess what I would say is like, okay, so if you go out in the world and you read like, what are the key KPIs or what are the what should agencies be focused on, and how should I be managing my finances, right? You'll see a lot of somewhat generic articles that list like, here's the 20 things that you should look at, right? Like that's the kind of that's the prevailing wisdom in the space. And we have a different view of that, which is to say, yes, there are probably 20 things that you could be looking at or focused on. But that doesn't mean you should be focused on all of them. In fact, there's probably only one or two things that you should actually be looking at any given time. And that is very contextual based on where you are in the life cycle of your agency. Right. So again, I'm not going to go into a long monologue about this, but very briefly, like we bucket agencies into one of four buckets, right? We call them, they're modes of agencies. We call it create mode. You're in 0 to 1 million in revenue, roughly. There's build mode. You're from like 1 to 3 million in revenue. There's grow mode. You're from like 3 to 8 to 10 million in revenue. And then there's scale mode. You're north of 10 million. And the kinds of problems that you face in each of those buckets are very different from one another, right? And the kinds of things that we are looking for and we are often working with our clients in is also very different. So let me not just like completely pump the question. A very common mode that we work with clients in is in that build mode, that sort of like north of 1 million, sub 3 million. This is the point where like 0 to 1 is all about just getting your agency off the ground, right? Like
Right.
it's sales and service. That's the whole exercise. And from a financial standpoint, you're probably not going to be very profitable. It's probably not very sustainable. And I would tell you, as a finance professional, who cares? Don't worry about any of that stuff. Just get to the point where this business should exist. Once you're north of $1 million and we've kind of figured out your unique reason to live, now we can work on the things like profitability as we work our way to the sort of $3 million mark, give or take. So, anyways, in that build mode, we are often talking about our clients, we're talking with our clients about what we call the hierarchy of financial needs. So we think about the things you should focus on or the problems you're facing in a hierarchy of needs, similar to like Maslow's hierarchy of needs, right? And the concept here is I'm only going to look at one stage at a time. I can't worry about self-actualization if I don't have shelter, right? So we are going to work our way through those stages. And so in our world, it's like solvency is the first thing. So like, okay, can I make payroll next week? If I can't, I'm not going to worry about operating profit. Surprise, it's bad, right? So like, let's not focus on that. And there's nothing I can do. I'm not going to outsell. I'm not going to go out and sell my way out of making payroll next week. There's no way that I have time for that. And so the things that we focus on are very specific to like accessing cash and pulling collections forward. The next bucket, which is where we most often live, is project profit, right? So once I've cleared solvency, am I earning a gross margin, right? And the most common area that new clients come to us where they struggle is in this area, right? We like to see agencies in the north of 50% gross margin, and we often get new clients that are south of that, right? And so, and I'll say one more thing and then I'll stop talking, which is when I'm in a gross margin problem, I have one of two problems, right? My problem is either I have a utilization problem. In other words, I'm paying for service people to do service, but I don't have enough service for them to do, right? So they're not utilized, or I have a rate per hour problem. So I have service people, they're doing stuff. I'm just not earning enough money on the stuff they're doing and to earn a proper gross margin. And by the way, that's generally like scope creep more than it
Right.
is I'm bad at pricing, right? So anyways, we spend a lot of
I
time.
think it's a little
Yeah.
bit of both.
Well, it can be. I mean, it
Because
can
I think
be. Yeah.
there's an overly high level of optimism when pricing projects that you want to win. And so you're like, well, yeah, we can really get that. We can be really efficient and get that done
Yeah,
quickly.
yeah, yeah, yeah. I should,
You
yeah,
know,
sorry. Maybe creep is it's a scoping problem rather than
absolutely,
a, I didn't go,
100%.
I thought I was going to get a one. Nobody went in and said like, I'm going to try to get an $80 rate per hour, right? No, no, they were thinking, I bet I can get, whatever it is, a buck 50, 200.
Right.
And they were either being overly optimistic on the scope or they had a good scope and they just let it blow without, without reining it back in. So, but yes, it's
Right.
almost always scope.
And I love that you're talking about project profitability because that's something that I talk about a lot because I too many agencies just look at their annual P&L and L and like, okay, that helps me figure out what my profit margin is. Yeah, kind of,
Mhm.
but there are all the component parts. And in
Yeah.
almost every agency I've ever looked at, there are certain projects that are subsidizing other projects. And you need to know which ones are the subsidizers and which ones are the subsidized so you get
Yeah.
more of the ones that are
Yeah.
subsidizers, right? And then hopefully you're not subsidizing anything and it's just profit going to the bottom line. But you got to look at it on a project level. You can't just do it agency wide, otherwise you don't really have the full picture.
I couldn't agree more, and it is. I mean, I'll be honest. It's somewhat shocking to me the number of like really large mature agencies, like north of 5 million, who have made it to that area, but are still not sort of dialed in at the project level. And you're totally right. Like, there's just so many downstream benefits of having a good understanding of project profit. There is just the sort of like the direct result, which is I can find ways to add more leverage to this business. I can stop doing the unprofitable things.
Right.
I can start doing the more profitable things. But there are so many other things that are true about the less profitable projects, things that like drain employee morale, for instance, right? These are the things that take energy from people. They're our least favorite clients to work with. It could be net accretive to just let go of your bottom 5%.
Absolutely.
And that's the kind of stuff that people don't necessarily think about or realize as they're embarking on that kind of journey, but it's a huge added benefit of doing it.
Yeah, and if you're tracking project profitability, it gives you the ability to price better for the future.
Totally.
And so many agency problems go back to pricing, right? If you say, well,
Totally.
geez, I can't invest in the future. Well, you probably didn't price correctly. I've got a morale problem
Totally.
to your point. It's probably because you have a price problem. You're trying to balance your books on the backs of your team. And
Totally.
and
Yeah.
so one of the first questions I always ask an agency is, how many of your employees worked over 40 hours a week on a regular basis last month?
Yeah.
And if it's more than one or two because there was some particular random emergency, you got a problem.
We have a
There's
problem
no
here.
reason for it.
Well, you bring up an interesting point. I was going to ask you this before you even said the word, and now I'm really going to, which is what's your take on a thing that we again, as I'm here, and this is I've got a margin problem or a project profit problem, and I'm trying to diagnose these. Where we often end up is in the world of time tracking, right?
Yep.
And time tracking is one of those third rail topics for a lot of agency owners. What's your view of the world on time tracking? Like what do you see? What is your opinion on that? I mean, I can certainly say mine.
I mean, I love grabbing the third rail. That's I had hair before I started doing
Sure.
that. So
Yeah, you live me
yeah. So no, you got to do time tracking.
I
I
know.
mean,
You totally do.
and
Yeah.
and if you don't do time tracking, you have no idea how to manage
Yeah.
properly
Yeah.
because you just, I mean, and most agencies that say they don't do time tracking, they're doing it in some fashion. They may not have time
Exactly.
sheets, but they're
Sure.
having someone estimate how much time are you doing on this, what percentage of your time is allocated to this client or that client. That's still time tracking. I mean, I'm
Totally.
not hung up on it's got to be, a
I
spreadsheet
agree.
and you list everything minute by minute and all that. I mean, no, it's as simple as it needs to be in order to get you the data that you need in order to make a smart decision. But you got to have the data. You can't just
Yep.
go off of, oh, everybody seems busy. Let me go hire somebody.
Exactly. I know. I get that.
Why?
Well, yeah, I know. Well, and it's interesting, right? Because like I'd say, two topics on that. One being like, we find agency owners that are often reticent to do the time tracking, and I think it's a function of like the perception of what asking people to record their time might be. I think there's just this tracking time isn't cool, or it's a kind of a big brother sort of a thing, and that's kind of like the number one opposition that we get. Like, oh, I cannot possibly ask my track time. And I would argue that if you're feeling that way, you either have your own block or you've approached it in the wrong way. Which is, I think if you're approaching it from the standpoint of like, look, we're not doing this to micromanage you. We're not doing this to control you. This is for our all of our collective benefit. To your point
Right.
earlier, which is, if you've got employees working north of 40 hours, that's a problem. So if I've got employees that are working more than 40 hours on a project, that's a problem and I want to get them help. If they're working far less, that's also a problem and I want to get them things to do, whether it's interesting internal projects or it's other client work. I can't solve that problem if I don't have that data, right?
Right.
And so I think that part of the trick is just approaching it the right way with people and
Yeah.
enrolling them in the why.
Yeah, you got to sell
And
them on it. And if you just tell them to do it, it will be Big Brother. But you need to explain to them what are the real benefits to them
right,
of the
exactly.
time tracking. And
Exactly.
and frankly, part of the problem is most owners don't want to do time tracking themselves, and so really they're laying it off on our team doesn't want this. They
I
don't want it.
know. I
But in
know.
a
And I
small agency, the owner is one of the most important people to understand how their time is being spent.
well, that's another really, I mean, again, not to make this a time tracking podcast, but I will say that's another like key point, which is, related to successful implementation and compliance. One is just like selling people on it. The other is like, don't ask people to do something that you're not willing to do yourself. If you're not leading by example, you're not going to get people to follow you, right? So you have to do it too.
Right. You also need to know how you're spending your time. It is the most precious, if I can speak this morning, precious resource that you can have in an
Totally.
agency is the owner's time or the partner's time if you've got more than one owner. It is the one thing that you can't just go out and hire.
Totally.
You've
Yeah.
got to know how you're spending it and you've got to make the best choices. And the only way is to know how you're spending it. And when I have an owner who tells me that they feel overwhelmed, they never get to focus on business development or whatever they want to be focused on. Well, why? How are you spending your time?
I know.
And then it's
Yeah.
just, well, I spend so much time on, administrative stuff. And I'm like, really? How is that
Mhm.
possible? You're $1 million business. There shouldn't be
Yeah.
that much administrative stuff. Let's start itemizing it. And usually what it turns out is they just remember the administrative stuff is so painful that they overestimate the amount of time it actually takes. And that
Yeah.
hour that they spent on working with their bookkeeper that week just felt god awful painful. The call that they had with their tax accountant. Oh my God, that was a
I know
nightmare.
exactly. I spent all week on it. Yeah.
Yeah. I mean, and so
Yeah.
you've got to do the time tracking because otherwise you just cannot make the best use of the resources you have available. And I do want to go back to something you said earlier
Yeah. Go ahead.
and push back a little bit on something, maybe a
Yeah.
lot on something you said, which is in the sub-million, you say you don't care if they're making a profit, right? And worry about that when you
Well, I'm
get to a
being
million.
hyperbolic, but yeah.
I
Keep going.
yeah,
Keep going. Yeah.
but I think it's I think because a fair number of listeners may have agencies, near
Yeah.
or below a million. I think that they need to understand you need to be profitable from the beginning because if you build unprofitable habits, they will stick with you. And you need to make sure that even in those earliest stages, it may not be as much profit as you're making later, but
Yeah.
you still have to be focused on profit Otherwise, you've built something that's interesting, but maybe not scalable.
Yeah. So, I totally agree, by the way, and there's lots of, like, I'm not a for larger agencies, I'm not a big proponent of this, there's a framework called profit first. I think at a certain size of or sophistication, I don't think that's very helpful for you, but I think for smaller agencies, that's a decent framework to think about, how do I make sure that I'm not, I'm running at a loss. I think my point is, like, if you're sub $1 million agency and you're going out and you're looking at reading these articles and you're reading the benchmarks of, like, I should be doing a 55% gross margin, I should be
Right?
doing a 20% operating profit
Just
margin.
stop reading those benchmarks.
Exactly.
The
That's
benchmarks are stupid. I mean, if you
well,
look
and
at the
they're
list
also go ahead, go ahead.
if you look at the list of the largest PR agencies, for
Yep,
example, in the United States, and if you do the math, because they have, how much
yep.
how many employees and how much revenue. And if you do the math, the revenue per employee is all over the map. For the I mean,
It's all over the map.
they're
Yeah,
very successful agencies, and some are as low as around 100, 110,000. Some are up north of 500,000. What is that? That doesn't tell you anything. It tells you you
it
need to have employees and you need to have revenue.
maybe they have
That's what
well,
I've learned.
that's totally right. So my point on the I have a point on that, and but before I leave it, the point on the small agencies is just to say that, like, it's very even if, let's say for the type of agency and the way I go to market, I think I can eventually achieve, let's say, a 20 plus 25% operating margin. It's gonna be very hard to do that sub $1 million, right? Like, there's just
Sure.
some amount of fixed cost that you have to amortize over a revenue amount. And the larger that revenue goes, the easier it's going to be for you to achieve it. So, just to be clear, I'm not suggesting that you should go and, like, take a huge line of credit and run your agency at a
Oh
loss.
God,
I've
no.
seen that a bunch
No.
of times. Don't
Yes.
do that, right? Certainly don't do that. I'm not suggesting, but, a lot of the conventional things like client concentration risk, like, hey, under a million, you're going to have client concentration risk. That's part of growing your agency. Don't over index on that worry. Don't over index on the 20% profit margin. The most important things is figuring out, like, what is my unique reason to exist and how am I going to acquire customers who want to buy that?
Right.
But again, don't do it, like, dramatically unprofitably. So let me just underscore that.
No.
I'm talking relative to, like, what is the target. But I think your other point is
Unfortunately, a lot of
yeah.
people are literalists when
I
they
know.
hear
Yeah,
us
yeah, yeah, yeah.
say things.
Relative.
So
Yeah.
I think it's
Relative to
important for
no.
folks to
Good.
understand that.
Yeah. But your other point is so true too, because, like, again, you'll go out and you'll look at, and we even say these things sometimes. Oh yeah, like, rule of thumb on gross margin would be, like, north of 50. We like 55%, just give or take. However, one of our best agencies is sub 50%. They're like 45% gross margin, and they do like a 33% net margin, right? They're incredibly profitable. But they're in the kind of business, they're outsourced marketing, and so
Yep.
their pricing power is a little bit lower, and so it's just a different game. Like, it's a scale game, it's a repeatability game. And so gross margin is going to be little bit lower, but they can get operating expenses, OpEx, to a pretty efficient level and generate an enormous amount of profit. And so, where you have a kind of agency that is, again, isn't highly specialized and doesn't have a lot of pricing power, it's just going to look a little different than the flip of that, where you have a highly specialized, highly expertise kind of agency. You may be able to generate a higher gross margin, but the flip side is it may be harder to get consistent utilization out of those people, right? Because
Right.
the projects are premium and they're maybe a little bit more spaced out. So the, I think your point is valid, and this is why we kind of rail against this, like, the traditional, here's the KPIs and here's the benchmarks. And then what ultimately happens is people try to apply themselves to a one size fit all. They don't fit. They feel like they're doing a bad job. Then they sort of, like, lose momentum, lose motivation, bury their head in the sand. They don't even want to think about finances because they feel like they're not living up to whatever blog they wrote. And I
Right.
think that's mostly the other thing I'll say is, like, there are the, 20%. That's what we would, we would target for an agency in the, like, the 3 million plus range. But, like, the median is way lower than that, right? So,
Yeah.
like, what we actually see is a lot worse. Like, lots of business is hard, and hitting the targets is not that's not the average. That's the aspirational.
Well, and
So
here's the thing too. Whose agency are you building? Are you building your own agency or are you building someone
exactly,
else's? I mean, the
exactly.
benchmarks are good if you want to build someone else's agency.
That's right.
But my view is if you're going to take all of the risk and stress of owning your own business, it needs to do what you want. In other words, you
Exactly.
need to be thinking about, is it allowing you to do the kind of work that you want to do? Is it giving you the flexibility to work when and how you want? And is it
Exactly.
making the money that you want to make? Forget about the team, forget about what the business says. Are you making what you want to make as the owner? Because if you're checking off all three of those boxes, the other
Who cares?
benchmarks don't really
Who
matter very
cares?
much.
Yeah. Totally agreed. Yeah, we have tons of agencies who have elected to drive their profit margin much further south than the target because they've got a team, they want a reward, they have incredibly generous profit sharing plans, and that works for them. We've got agencies who absolutely could grow into the $7+ million range, and they just don't want to because they have seen the movie play out and they're not interested in that. And that's fine. That's all great. So I couldn't agree more.
The one thing I will say is that if you are running it too close to the line because you're getting exactly what you need, but you're not leaving yourself much wiggle room, you start to have challenges in times like these, which I think is a good segue to our final
Oh yeah.
topic
Yeah.
today.
Good.
It
Yeah.
people are nervous. I
Mhm.
every week I'm getting people coming to me as they really have for years and years now, but it's at a higher tempo now
It's a
than
slow
it had been.
boil.
You know, so are we going to have a recession? What does it mean? And agencies are seeing in general that sales cycles are elongating a little
Yep.
bit, not as
Yep.
much as I've seen in
Yep.
past recessions, but there are slowdowns. The ticket sizes are decreasing a little bit,
Yeah.
and maybe a shift a little bit more towards project revenue versus recurring revenue for new clients who just want to keep their flexibility open. So,
Yeah.
what are you seeing and what are you advising agencies to do as they think about what might or might not be on the horizon economically?
So, what am I seeing is it's asymmetrical, as it often is, right? So we
Always,
have
always.
agencies with a high degree of exposure to like B2B enterprise SaaS companies, like Silicon Valley tech companies. They've had a lot of like high profile layoffs and budget freezes. So those agencies are feeling a little bit more headwinds than some of the others. Um, yeah, I mean, look, my personal, my synthesis of what's happening is just a function of, look, the last 2 years have probably been some of the, I'll use the word easy. That's maybe not the best word, but like we've been flush with government funded subsidies via PPP and ERTC and like those things as they sort of dry up, we're feeling the bit of a hangover that's just consistent with a return to what it used to feel like to run an agency back in 2018 or 2019, right? Like nothing's easy. Business is hard. Projects are are hard fought. Sales cycles can be long, especially when you're working with enterprise customers. So, like, if I zoom way out and I remember what it felt like in the mid, whatever it is, 2016, it kind of feels like that, right? Again, it is definitely asymmetrical. But I will tell you that, like, just anecdotally, like the new agencies coming to work with us have never, like, our Q1 was the best we've ever had. We've never
Yep.
had more agencies wanting to spend a premium price on our kind of advisory. And so, again, I think there's more fear and uncertainty than there is, like, real. I mean, you're seeing this in the market right now, like, the earnings season is happening right now, and public companies are beating many of their estimates because there's just a disconnect between what the media is foretelling, what's actually happening. And what's actually happening is, like, yeah, some highs, some lows, but, like, kinda mostly business as usual. However, um what we are telling our clients is, I mean, there's a variety. We have this recession guide. We can put in the show notes or something. I'm not going to go
We
through all
will.
that,
Yeah,
but I'd
it'll
say
be in the show notes.
the most important thing is just preparation, right? Which, by the way, none of the things we're telling agencies are like situational to a recession. They're all evergreen things. They're all stuff we should
Exactly.
always be doing. Like this is all
Right.
just normal stuff, right? But it's really important now. But like, so having like a really good scenario plan if for no other reason than just sleep at night factor, which is to say, okay, look, in a normal year, we're gonna have our base case and we're gonna sort of plan to it. But let's take let's do a few more cycles to coming up like what's our base case? What do we think this year is gonna maybe look like? Let's come up with our bad case and let's come up with our really bad case, right? Like let's just, hey, if all of the media is accurate and revenue declines by 50% or whatever your versions of your base case, bad case, and really bad case. Let's just throw that on a piece of paper, right? And then let's ask ourselves right now, when things are not really bad, let's ask ourselves right now, what are we going to do if that happens, right?
Yep.
And again, very specifically. So not, oh yeah, we're going to cut costs by $20,000 a month. No, no, no. I mean, like, what kind of costs? Are those individuals? If those are individuals, what are their roles or what are their names?
Right.
Like, be very specific, create the plan, put it in your desk drawer, and then go about your life, right? So if that manifests, if that happens, when when you're on tilt and emotionally you're like, "Oh my gosh, things are really bad," you can defer to what your logical mind thought you should do when you weren't on an emotional tilt, and you can just execute that playbook. And that is absolutely what we're telling clients. Some of our clients have pulled it out of the drawer and are in their bad case. It's more the exception than the rule,
Yep.
but that's it. If you do nothing else, just have a plan, put it aside, go about your business.
Yeah, I think you've made two great points there to end this episode on. The first one is that you really the same management tactics that you would use outside of a recession are the ones you should be using if there is one. You know,
Totally.
you've got to have that cash cushion. You've got to have the plan. You've got to be looking at your resourcing and all that kind of stuff. But you should do that even when times are great, and you shouldn't just ignore them because things are going well. The
Totally.
second piece that I think is absolutely critical is the asymmetrical nature of almost any economic downturn. And I've been through slowdowns and Great Recession and
Right.
and
Yep.
even the sudden overnight economic impacts of COVID and
Yep.
also 9/11. And
Yep.
and running a businesses during those things teaches you that no two businesses are the same. I mean, if you look back to March of 2020, some agencies started thriving immediately because they were in spaces
Totally.
where people needed help. You know, maybe they were advising healthcare businesses who needed communications help right now, or someone was trying to get into the digital space who had been brick and mortar only. And so digital agencies did really well.
Yeah.
You need to know your own client base. You need to know the
Yep.
industries you serve. Talk to them, understand what they're doing. That's what matters, not what you see on the nightly news, if you still watch that, or you read on a website or something like that. It's what your actual customers and prospects are saying, and more importantly, doing.
Yeah.
So,
I mean, if I add one thing, which is just to highlight a thing you said, information is your friend, right? So you should have open conversation, have budget. I mean, it's April, but like have budget conversations with all your clients, especially if you have any kind of client concentration risk. Like if I've got large, systemically important, like I'm making that my number one priority. I'm joining those client meetings to a higher degree than maybe I used to. And I'm having open, honest conversations, and at the first wind of sort of negative news coming from them, then I'm going to work my way down my plan, right? But
right.
you're like you said, it's all about your situation, and just get closer to it and get as much information as you can.
Yeah. And stop telling me that you've got a contract so you don't need to have those conversations. Because I don't care if you've got a 3-year contract that you think is
Don't
ironclad.
worry about
It's
yeah,
not. It is
it's
not
not.
worth the paper that it is printed
No.
on.
Yeah, it's
And
totally
if you
true.
weren't in business in March of 2020, maybe you
Yeah.
don't know that. But if you were in business in March of 2020, you know that clients just pick up the phone and say, "Yeah, I ain't paying you
Sorry.
next month. Good
Yeah.
luck."
Yeah, exactly.
And what are
Totally.
you going to do about it? I mean, you can sit
Yeah,
there and bang your fist on the
sure.
table, but
No,
hopefully that makes you feel good for a few seconds. That's about
yeah,
it. It's
there's
not,
nothing
you
you can
can't
do
take
about
it
it.
to your bank. So,
Totally
in
agree.
any case, if someone would like to learn more about you or Upsourced and maybe get the recession guide, where should they go?
Yeah, totally. So best place is our website, upsourcedaccounting.com. We also have a YouTube channel where we put out content in these topics, which is /upsourced. So those are the best places to find us.
Excellent. We will include all of those in the show notes. I would
Cool.
encourage you to check them out. Ryan, this has been a fantastic conversation. We covered a lot of ground in a short period of time. Hopefully, listeners got some value out of it. I know that I enjoyed it and got value out of it myself. So,
It was fun,
thank you
Chip.
for joining me. Thank you for listening, everybody. And we'll be back again with another episode very soon.